It's Chris VERMEULEN from thetechnicaltraders.com, and if you are a investor or trading and you are into the Magnificent Seven stocks, then you better buckle up because the bottom might not be in. In fact, we talked about how everyone was trying to pick a bottom over the last couple of sessions. We saw that in all of the aggressive and funky sector ETFs I shared, and the market is on the verge of a crazy drop that's going to catch people off guard and shake out the bottom pickers, apply maximum pain potentially before putting in a bottom. So let's take a look at the charts. Equities are slightly down again today. NASDAQ down 0.5%, SP 500 down 0.4%, Russell down about 0.4%. Overall, as we can see, it has been one heck of a bloodbath when we look at the markets and the way it's gone down. It's dropped, had a little pause, dropped, had a pause, dropped, pause, drop, pause, drop, pause. And a lot of people are trying to pick this bottom. It feels like the bottom wants to be here, which is kind of a red flag. We talked about how we saw the sectors just 2 days ago. All the sectors that started to put in a bottom were all the aggressive sectors. Those were bottom pickers. Those are people trying to get into the most aggressive stocks and trying to pick a bottom. And of course, the market continued to sell off, and now it has another pause, and people are thinking, okay, well, now this is the new bottom. People thought this was the bottom. This is why you don't want to catch a falling knife. You don't know where the bottom is, and there is a ton of momentum down. This bear flag right here in the market, let's just map it out real quick. If we were to map this out in the SP 500. So it's kind of an ugly little chart here. There's a few different patterns through here, but overall, if we were to take the most conservative one, we could just say, okay, well, this is where it really kind of broke down and had a little flag. This is telling us where that next very, very small downside target would be. The most conservative target, that is another 2.5%, 2.3% to the downside. It could go a whole lot more than that, but overall, that is kind of potential there. Now, I do feel like, let's take a look at the Magnificent Seven. I showed this last night in the afternoon update. And let's look at the 30-minute chart. Now, there are multiple waves here. We went from an uptrend to the market generating a sell short signal. It went into a short, came all the way down. It's have a series of waves to the downside. If we just look at this most recent price action, there's all kinds of Fibonacci waves in here. But if we just take a look at this wave down and here and the hiccup through here, we carry that across. You can see price moved and it came down, had that pause, and then it came down, hit the 618, and came all the way down to the 100% level. So now that this is a move to the downside, now we can look at this larger move as the first leg down, and then this as that second. So we can take a Fibonacci, and we go from this level, we go to these lows, we go to this high from yesterday, and that is going to show us where the downside targets are for the Magnificent Seven, for the Mag 7 ETF. That is a 5% to potentially like 8.5% drop in the mags. And wherever the Magnificent Seven go is probably what the indexes are going to do. Not percentage-wise. If this drops 8%, then the stock indexes will probably go down 2 to 3%, which is what the short-term chart of the SP 500 I just showed you actually was pointing to. So in the grand scheme of things, a lot of people are trying to pick a bottom here, and that is a red flag. I mean, I feel like we're close to a bottom, but this is why I don't try picking bottoms anymore, because our brain naturally always wants to pick a bottom, and we always feel like, oh, that's capitulation selling, but the trend is down. Look at a series of lower highs, a series of lower lows. It's going from smaller swings to they're starting to get larger, and that means the volatility is increasing. As we drop more and more, we're obviously getting close to some type of bottom, but we don't know where that is. And some of the biggest drops happen right near the end. A lot of people thought this was a bottom, and then we had this huge drop down. And now we could have another big drop in this space. So it'll be very interesting to see how the next few sessions play out. Just a quick reminder, if you like this content, my updates I'm putting out here, be sure to click that subscribe button and give it a thumbs up and share it with friends, anybody you think is interested in understanding the markets and knowing where these major trends are going. Also, you can go to my website or Amazon or Chapters, wherever, and pick up my books if you're interested in learning about asset revesting, which We really only have one good shot at a retirement, and if you lose it all, which I believe is just around the corner, if we have a financial reset, you're going to want to understand asset revesting, which is about catching and identifying trends and only holding assets going up and benefiting from falling asset pricing. Also, if you like the short-term technicals, you love the FOMO, the panic selling, overbought, oversold short-term trends, Technical Trading Mastery in my book, this has got the details on how to set up the charts of my 30-minute chart that allow you to see all of that. Anyways, that's about it. This morning I had a way longer video with all kinds of great details. Camtasia screwed up the video, so I just recorded the last section, which is important for the long-term investors to understand. But this also applies to short-term traders on how you navigate the markets and what kind of money is yours and what money isn't yours when looking at a chart. The only other important part of this morning's video, other than this market could have another leg down, which is why we don't pick bottoms, is simply take a look at the weekly chart of the SP 500. We have a break of a key moving average. There's quite a bit of damage being done to the long-term trends. What's happening underneath the hood right here in terms of overall market momentum and stalling of various things is equal and actually worse than what we saw over here just before we got into a trend change about a month or so later. And we went into that year-long kind of bear market phase. So that is the big concern. We have seen a very nice move up in the bullish signal move here. So if we take a look, we had a bull signal move. We were up about, at one point, about 51%. Obviously now it's down about 38%. And the understanding here is that this market is going to, the longer term trend we follow, the more wiggle room you need to give something. And a lot of people, for some reason, wish or want to always say, well, we should have got in lower. The reality is we need the trend to move up to show us it's in an uptrend, meaning we're going to pay a higher price. The bottom will have been put in, and we buy dramatically higher until there is the momentum shift and everything to the upside. And it is the same with a top. We don't get out at the top. A lot of people are like, we're giving back tons of our money. The reality is, guys, it's not our money. And what we want to catch is this middle section of the move. We are, if you think you should be getting in and buying lower and you shouldn't have to give back as much, then you have the wrong idea of how the market works. If you're actually going to have a long-term strategy and enjoy the markets versus always feeling like FOMO and that you're giving money back, we don't get in near the bottom, we pay a higher price. We don't get out of the top, we exit at a lower price because we need trends to change direction. If you think you can catch these or we're giving it back, then you are a bottom and top picker and you don't have the proper expectations. A long-term trend requires bigger pullbacks and bigger reversals before that trend comes to an exit. This middle section is what we should be capturing. This is what we're trying to get. We get in late, we get out late. The middle section, if we do it properly, we are able to pull money out without having a ton of stress and making sure we don't give too much back in terms of we want to catch these long-term trends. Obviously, look over here. We got into the market here. We got out over here. If you take a look at the low, we missed out on a almost 40% move before that trend started. And then we ended up catching a 40% move to the upside, but we had to give back roughly 12% from the highs. And if missing out on these V-shaped bottoms or market bottoms and not catching, paying a premium, well, supposedly to some of you, it's paying a premium, buying in way too late, then you're not the right mix for what we're doing anyway. And you are going to definitely struggle in terms of being a trader. Well, currently, we're down about 8%. For all we know, we might not be getting out for another few more percent to the downside as this market chops around and we get a trend reversal. Hopefully a long way before we hit our protective stop, which is way down here for a Hail Mary in case all hell breaks loose like a COVID that can snap us out of it and be like, okay, just move out, protect your capital. So that's it for now. Talk to you soon. Bye-bye.